First, I would like to start from problems. China has set a kind of model of faster economic growth. In the past 3 decades, the growth rate has always been high, between 8 to 10%. Where comes such fast growth? Many people attributed that to the market-oriented reform. Someone even says that's a sole reason for that. Okay, if during the reform we can achieve such growth rate, what kind of growth rate ahead when we complete that reform? Higher than 10%? Well, look at the pure market economies. What's the average growth rate there? Probably 2% or even less. That's what we want? Or we might rethink about the sources of the growth in China. Many people have also mentioned the high national savings and the investment rate. Like yesterday, last evening's speech said the investment rate. I think that's a major factors behind the Chinese economic growth. When we say national savings, probably we should make distinction. Some people, when they say the trade conflict, they said because China have a higher national savings rate. Okay, if China consumes less than it produced, that consumption including investment, that China must export a lot. That might have an impact on other countries. But when we say national savings, if it's equal to the national investment, then the next export might be 0. Okay, so national savings rate may not have negative impact on other countries if we reinvest all that in domestic economy. Whether the pure market economy could have the same high investment rate, I don't think so. Market economy could guarantee high efficiency, but high efficiency may not guarantee full employment. Otherwise, we don't need macroeconomics. And full employment may not guarantee high growth rate. Otherwise, we don't need development economics. What determines investment? The expected return to investment, no matter it's invested in physical assets or technology. In a pure market economy, if the expected return to investment determines a certain rate of investment, and that investment could maintain only 2 or 3 or 4% of growth, what we can do? Economic theory tells us we can do nothing, and we should do nothing, right? But in lower income countries, we want to grow faster, especially in a country like China have a so large rural population, we want them to move out of agriculture. We need high investment rate in order to expand our production capacities to absorb such laborers. Of course, certain kind of public decisions on investment or public or government interventions, including the state-owned enterprises, that might bring the investment rate beyond the market equilibrium level to give us higher growth rate. Of course, that might have serious cost, the losses in efficiency, and also a lot of other problems with faster economic growth, such as income disparity, stress on environment, resource, and social tensions, and so on. Then the issues I believe is that how to balance the higher growth rate with the efficiency. So I would like to say the high national investment and savings ratio make our engine more powerful, but we need also the market-oriented reform to make the engine more efficient and keep that in the correct directions. Thanks.